Hey everyone, we're 20 episodes in, and I want to thank every single one of you for tuning in. In today's episode, we're going to take a look at a company many people call the Carvana of China, Uxin, ticker UXIN. If you like this content, please give a thumbs up, subscribe, and let me know in the comments what you think. I am new to being a shareholder of this company, so for those who have information that I may have missed, please let me know in the comments and share it with the community. This is how we all become smarter in what we invest in. We'll take a look at Uxin's company profile, their financials, their outlook, risk factors, price target, and I will provide my final thoughts. As a reminder, I have a link in the description box below where you can follow me on my investing journey as I invest in 4 different common investing strategies and see how each one does over a long period of time. This is to help investors to get an idea of figuring out what strategy works best for them. Also, I learned about Uxin through my Twitter account, so follow me at InvestingKev. And I posted something in the China stock subreddit this past weekend if you want to read my thoughts on what I think of all that's going on in China in the stock market. Those links will also be in the description below. And I also have a growing collection of videos. Check out the recent video on China and the data law and also ZTO Express stock breakdown and analysis video, which is a Chinese logistics and network company. Alright, enough of this intro, let's get started. Uxin is a leading nationwide online car dealer in China. The company's mission is to enable people to buy the car of their choice online. In China, consumers generally face various challenges when buying used cars via traditional supply chains, such as limited access to a wide selection of used cars, inconvenience in buying used cars from other cities and regions, a lack of transparent and reliable information about car condition, and complex transaction processes. Uxin is committed to addressing these issues through its innovative used car supply chain by providing customers with a reliable and one-stop hassle-free online purchasing experience. Taking a look at their annual reports, at the end of 2020, they adjusted their fiscal year ending in December to March, so things look kind of all over the place. From 2016 to 2019, when they had a January to December fiscal year, they saw continued growth in the revenues up until 2020, which of course COVID-19 happened. There was a lot less travel, people were in lockdown, and the thought of buying a used car was probably very low on people's minds back then. Taking a look at the right side at the fiscal year end of March 2021, they had revenues of 657.4 million RMB, which is about 100.3 million US dollars. You can see their operating expenses going up, and looking at net losses, you can see that they've continued not being profitable. So that's definitely something to take into consideration, which management has acknowledged. And taking a look at their balance sheet, their total liabilities exceed their current total assets, which again is something I like to keep an eye on over time alongside other factors in determining whether this is a continued hold or not. This is from their fiscal year report back in July, where they said that they faced challenge of sustaining sufficient working capital for their operations. Together, they overcame the pressing financial constraints and delivered some key achievements. We'll take a look at ways they've improved their company next. Looking at their outlook, I want to address their financial concerns. We saw that management acknowledged the financial constraints they encountered due to COVID and other factors. So what did management do with their business? They decided to transform their business into an inventory owning model. This was a critical decision driven by the enormous pressure on their business from the combined impact of COVID and severe capital constraints. They faced their challenges head on and successfully transformed their business with a stronger foundation of a much leaner and efficient operation. Since September 2020, their veteran team have acquired used cars in more than 40 cities across China, and only the ones that met their strict standards in terms of quality and value for money were added to their vehicle inventory. They have control of the supply chain where the cars meet the highest quality and standards, which helps build their moat as a company focusing on quality above all. And their first inspection and reconditioning center in Xi'an was officially in operation in March 2021. This is an important infrastructure part of their business transformation, as the IRC has been designed to service a range of functions including vehicle refurbishment, warehousing, and exhibition. And focusing on quality is tied to providing the best customer service. Management says their Net Promoter Score, also known as NPS, is at a 42 for 2 consecutive quarters, which reflects the strong customer recognition of their premium quality used vehicles and services. What exactly is NPS? NPS is said by some to be the holy grail for understanding customer satisfaction and in turn customer loyalty. It is a simple score between -100 to 100 that helps organizations rank themselves within their industry and independently. If your NPS score is above 0, it's good. If it's above 20, it's favorable. If it's above 50, it's excellent. And if it's above 80, it's world class. Uxin was able to increase their NPS score of 10 back in June 2020 to a 30 at the end of September 2020. They're currently at 42, which is impressive growth and shows their commitment to customer service. You can't talk about Uxin without looking at the used car market. In this Bloomberg article, it says that China wants to build a 306 billion used car market from scratch. This is a very young market that has yet to mature. Factors such as increasing car ownership, rising disposable income, accelerating penetration of online advertising, expanding urbanization, and escalating demand for affordable used cars would drive the growth of the market. Car ownership is growing in China, and Uxin is at the heart of this growth alongside its competitors. And just recently, Uxin signed a financial agreement with Neo Capital and Joy Capital for a potential total of $315 million. This will appoint Neo CEO William Li and Joy Capital founder Liu Erhai to the board of directors. William Li at the time said that the used car market in China has exponential growth potential and believes Uxin will continue to lead the development of China's used car market and help the industry reach new heights in quality and reliability. Looking at this article from China Daily, China's used car market is maturing and is expected to reach the same number of sales as new vehicles by 2025. Statistics from the China Automobile Dealers Association show sales in the first half of the year stood at 8.43 million, which is an increase of 52.9% compared to the same period last year. The growth rate was only 3.9% because of the COVID lockdowns. They forecast that the used car market will continue to grow and exceed 16 million units this year with an increase of around 15% year on year. It's expected to surpass 30 million by 2023. And as the global chip shortage takes its toll on the new car market, some customers prefer to choose used vehicles instead of waiting for new ones. The sales ratio of used and new vehicles was for every one new car sale, there was 0.55 of used car sales in the first half of last year. That ratio has grown to 0.65 used cars for every one new car sale this year so far. I want to take a look at some risk factors. The first one is the government. In the past, used cars had a lot of hurdles that resulted in a lagging circulation of used cars. The three hurdles are the cross-province transfer restriction, the added value tax, and car registration. The government has addressed and is in the process of addressing these hurdles. Last May, the Chinese government reduced value-added tax on used cars from 2% to 0.5%. China's Ministry of Commerce said that last month that it would remove unwarranted restrictions and accelerate cross-province registration for trading used cars to boost consumption. And the ministry is currently working with relevant departments to accelerate the development of the used car market by lifting restrictions on cross-region transfers, assisting trading, promoting information sharing, and innovating circulation models. So far, some provinces have implemented the measures and achieved good results. With the policies gradually benefiting more places, the used car market will get rid of opaque information and unregulated market rules. This is a projected $300 billion market in 2025, and there is no doubt Uxin will be competing with current players in the industries alongside new competitors. This competition will fall on the management to navigate this company through their financial restraints while also continuing to find ways to be profitable. Marketing costs will likely have to go up as they have to market themselves compared to their competitors. This ties back to their financials as this is not a profitable company and likely won't be for the foreseeable future. Competition may push them further away from being profitable, and financial health and projections is definitely something to keep an eye on as an investor. Another risk factor are outside factors that are beyond their control. We saw the impact of COVID on their 2020 numbers. If people are locked down, they can't travel, it's going to be very difficult as their inventory may be building while their operating expenses continue to go up as they can't sell these vehicles. Taking a look at the price target, there's not much information out there, but on CNN, a single analyst has given their price prediction of $6.36, which would be over a 105% increase from its current price of $3.10. I'm holding the stock for the long term, so I will be keeping up to date with quarterly reports, annual reports, and any other major news about this company. I believe in this company's potential, but potential is never a guarantee. Taking a look at their stock price, back in mid-June they were at their highest at $5.18, and since then they've been down $2, which is a 40% drop. I don't have a crystal ball and I can't tell the future, which is why for me I'm only investing money that I'm okay with losing. This is a very small part of my portfolio, and if things were to completely go downhill, it wouldn't impact my portfolio that much. Overall, I do like this company. I am keeping an eye on their financials closely, but I can definitely see their potential in a very immature market. From what we just went over, we're talking about a $300 billion market alongside the Chinese government removing hurdles alongside car ownership rising. Having a company that has its own inventory which allows them complete control on the cars they select, refurbish, and present to consumers is huge. Their customer satisfaction scores are rising, and they're building a moat as a company that focuses on quality. I do like seeing Neo Capital and Joy Capital on the board of directors as I believe in the vision, and I agree with Williams Lee's statement about the used car market having exponential growth potential. Given the current information, the stock looks really promising. If you like this video, please give a thumbs up, please subscribe, and let me know in the comments what you think. As always, stay safe and I will see you all next time.